Investors and traders, welcome to the channel Market Chart Pattern. Today is the 21st of May 2023 and we are doing a weekend review of the major US stock indices that we follow. A huge welcome to the new subscribers and the returning subscribers. Thank you very much for watching my content. This video is for educational purposes only and it is not a financial advice. So guys, before we move on to looking at the stock indices, as we always do in this video segment, let's actually quickly also visit the issue of the debt ceiling. So here I want to highlight one thing to the subscribers, and that is what we are looking at is the chart of 1 year US credit default swaps. So let me see if I can actually make this. Yeah, so here we go. United States CDS 1 year USD. So what is a credit default swap? So essentially it is an insurance on the debt. So in this case it's the insurance of a duration of 1 year debt for the United States. Here just the only thing I want to point out is that here this is the level which we had seen this insurance was in 2009, and look where we are now today. It's a huge gap up, which means that in the market we are seeing some jitters. So last Friday we saw some US stock indices sell off a little bit, and in the bond market analysis, which I done a video, and highly recommend you guys to actually watch the video on the bond market. I will also put a link in the description and also towards the end of the video. We are seeing some sell-off in the bond markets. So here the only thing I want to point out is that here the market is actually a little bit nervous, and the probability of a default is not zero. It's very small, but it's not zero. That's the only thing. Let's move to our charts here. So what we are looking at is the daily chart of the NASDAQ 100. So this is the futures chart, NASDAQ 100 E-mini futures. I have actually done a little bit of a cleanup on this chart. So last week when I had done the video, we were looking at the concept of market symmetry, and also a 61.8% retracement coming in from this purple line which we highlighted here, and what we saw was just a 1 day dip slightly, and then the market actually rode above it, and that is a good sign. So I'm going to remove that here for now. Here we go. And we had also discussed the concept of market symmetry. So in this swing, which is shown right here, we have had the corrective moves of about this much. So here we go, here, and what we were anticipating was that perhaps if there is going to be some corrective move coming in, then the 12,800 level was to be watched, and we had highlighted this with a brown line here because of the structural support coming in here. So what the market in fact did was it ripped through it, and on last Friday it did have a bit of a sell-off after actually taking out this swing highs on the left coming in from 16th of August 2022. So in terms of momentum, the market is pretty strong. Look at since the October of 2020, a series of higher highs, higher lows, and also we have consecutive higher highs, and with this swing being taken out, that's also a positive development. So I'm going to actually clean up a little bit more, remove this, also remove this this trading range. I'm going to remove this and also remove this. So guys, what we are looking at now is actually, as the title says, that NQ100 AI powers the tech rally. So that's one of the things that behind this rally, what we are looking at is there are certain tech stocks which are very, very strong, and they have actually pushed the market, this index, pretty high, and that's pretty good thing, and those are AI related stocks. So let's take a look at NVDA. So I'm going to actually include this in one of the the power tech stocks that we follow, and here what we are looking at is this stock. Look at this powerful rally. In fact, I've got some old analysis here which I'm going to delete now. It is not going to be relevant, and there we go. So the most important thing is right here. Let me actually clean up a little bit here. So in fact, what this stock did was, when it started to rally in October, so 13th of October, that's when the majority of the US indices actually bottomed, staged a pretty impressive rally formed a double bottom. If you look at the structural resistance on the left hand side, then it had a pretty good retracement, and that actually went right to the 61.8% Fibonacci retracement, and boom, there we go. And after that, it has had a one heck of a rally, and this is one of the stocks that I should have put in my for our video segment where we look at the key tech stocks, but I missed that, and I'm going to make sure that in the next video which we do, this stock is included. And where the stock is trading right now is, let's have a quick boom boom boom. So it's in fact broken above the 78.6 Fibonacci retracement. Most likely it's gonna go for the highs one more time. So this is one of the reasons that this one stock, look, it goes from 100 to 300. That's 3 times. It's gonna have a pretty good impact on the overall index. So let's actually go back to our NQ chart. There we go. So here, what I'm also pointing out is that actually the index is pretty strong. It's above the 20-day moving average. We also have this trend line here, which is essentially a series of higher lows, and we have this market symmetry in place as well. But one of the things that I would like to point out is that look at this black ABCD formation. So this is actually the AB leg. If you multiply this with 1.618 and you project it from point C, then it goes up till here. And in fact, on last Thursday we went a little bit above that. So this could have been a point of interest where the move might have faced some sort of a resistance, and we are still in that region actually. And if you look at this yellow line, that's another ABCD formation. It's a little bit above that, so we are in that sort of region around the 14,000 level. But what we have is a pretty strong resistance level coming in for the index, a little bit above around the 14,350. And why do I say that it's a strong resistance? Because we have a confluence of two Fibonacci ratios coming together. So we have the 61.8% Fibonacci retracement coming in from this high formed back in November of 2021, so quite a while ago. 22nd of November 2021 to be precise, and I believe that was the all-time high reached in this index. And we also have a 78.6% Fibonacci retracement coming in from these highs formed around the 29th of March 2022, so a little over a year ago. And these two resistance levels are in close proximity, giving us a confluence level to watch. So here what we are going to do is that we are going to watch the price action really carefully and closely to give us some clues whether this index is actually going to pull back a little bit. Look, the index has been rising, as most of the US stock indices have been rising, with the exception of Russell small caps in this ABCD formation since October of 2022. And if you count the number of months and seasonality, we are approaching the summer months. It is actually going up for quite a while, and we are approaching some of those summer months where we have some pullbacks seen historically speaking. So that's why we also have to watch this level really carefully. Now I'm going to do something quickly. Look at the weekly chart. So on the weekly chart, here we go. Look, it had taken out this high of the swing of 15th of August 2022 last week. That's a good formation, especially from a momentum perspective as well. But the key chart that I really want to show you is this one. This is the long-term monthly chart, and what I've done is actually gone back into the history pretty much as far as we could go on TradingView, and I have looked at the key the key lows. So one of the key lows is obviously of March of 2020. And what we see is that where the support has come in October of 2022, that was about a 61.8% Fibonacci retracement. And the next level I went far, actually I went to 2008 lows. Then I realized actually on the chart we have a lower low as well. So I went back to the lows, which are actually in October of 2020, excuse me, 2002. Even hard to pronounce that because so far back, about 20 years ago. So October 2002, and what the index did was it retraced 38.2% Fibonacci retracement. So we have a confluence of two Fibonacci ratios coming together, the 61.8% coming in from the March 2020, and then we have the 38.2% Fibonacci retracement coming in from October 2002. And when we have two Fibonacci ratios and more coming together, and also in particular if we have some sort of a pattern formation like an ABCD, these are usually confluence levels that we need to pay attention to, because these could be pretty good support or resistance level. So what we are seeing now, where actually the market seem to have formed a bottom in October of 2022, is a pretty significant level from a really long-term chart as well. So that's all positive for the tech stocks in the index. But nothing goes up in a straight line. There will be resistance levels, there will be corrections, and as long as this low is maintained of October 2022, 13th of October 2022 in particular, then what we are looking at is this confluence level being held, and which would be positive for the Nasdaq 100 E-mini futures and the stocks in it. So there we go. Then let's take a look at the SPX. So we are looking at the S&P 500 E-mini daily chart. For those of you guys, our subscribers who have been following our analysis for quite some time, you will know that we have this ABCD formation and targets defined here. And we also had a smaller one, which was around 4,225 to 30 region. That seems to have been met because of the smaller ABCD formation highlighted in black last Friday. And the good thing is that it also took out some of the resistance, so perhaps it was a breakout, but most of the breakouts actually fail, and then the price begins to move back into the trading range, and then find some sort of a support or test the lower boundaries of the trading range, forms more momentum, and then is able to break out of the range, and that is then a sustained breakout. So we'll have to wait and watch and see what's going to happen here. But here again, what we are looking at is this ABCD formation defined in this blue, and that could actually take us to around 4430, and that's what we have written here. So again, there could be some correction levels or resistance can come in. But what is really important for us is to take one thing at a time, and what is really important is this 4070 structural low here, which also happened to be around 38.2% Fibonacci retracement of this swing here. So as long as this is held, then we think that we are in this ABCD pattern formation, which could actually see the price move higher to about 4430 on this daily chart. Now moving on to the weekly chart. On the weekly chart, we have also some different levels. So for example, we have this zone here where we could anticipate some sort of resistance coming around also 4300, which is the 61.8% Fibonacci retracement. But on the weekly chart, the thing to point out is, because of this bigger ABCD formation, we could actually see the price go as high as 4450 and even 4500. And 4500 is where we have this 78.6% Fibonacci retracement coming in from the highs reached back on the 3rd of Jan 2022. And we also have a 1.618 expansion as well of a Fibonacci retracement. Here we go. I'm just trying to find which one it is. Here we found it. So oops. Yeah, I believe it is this this leg here, this one. So there we go. So that's the possibility which we have in the S&P 500 index. On the momentum basis, the momentum is strong. The price is above the 20-week moving average and above the 200-week moving average. Also look at this trend line here. This is one of those trend lines which the whole world was watching, in fact. And one point, when on the in the December 2022, we had a break, a break above this and then a break below this. That was actually a false signal, and that was very, very confusing as well, because it was a break of the trend line and then the price actually failed to break above it. And then what happened is that we had another attempt to break out of it. We formed a double top here. The price came back and tested this trend line, which now acted as a support. So one time resistance now became a support, and then we have a series of higher lows. So that's something also to watch. Just looking at the monthly chart now. So here we go. So looking at the monthly chart, if we look at the top to the decline, the price has actually been moving more above the 50%. So it's actually gone above 50%. And here in month of May, it has taken the highs of the 1st of February 2023, which is also, from a taking out the swing is also a good development. It looks like 43.10 is the 61.8% Fibonacci retracement. Maybe not sure whether this month is going to go and reach that, but obviously we are watching our further targets on the daily chart, where we have ABCD patterns which are easily more easily seen than a longer term monthly chart. Let's really quickly take a look at Russell 2000. So Russell 2000 has been this index which has been actually lagging, and if you look at especially the tech stocks, they're pretty strong. S&P 500 is much stronger than the small cap Russell 2000, but it seems to be forming a base and seems to be in this trading range. So let me actually draw this trading range right here. Here we go. And the one of the key levels that we are watching is this 1852, because that's the 61.8% Fibonacci retracement of this leg lower. So after forming this ABCD formation, it has had a pretty good sell-off, and now in a trading range, if it begins to trade higher on a closing basis, 1852, that's a very that in my opinion, that's going to be a positive development for this index and small caps. And then we could see perhaps higher prices to come in for this as well. But overall, if you look at it, since July, in fact June of 2022, so we're approaching about 1 year, the price action has been sideways, in fact a pretty large range, to be honest, but it's pretty much sideways in a trading range price action. And look at this beautiful ABCD, which we were able to catch the top to the tick, and also we had a structural resistance coming in from the left hand side here, forming a double top formation as well. So guys, this is what we are watching in the key US stock indices. If you like our analysis, how we look at the markets, how we use pattern recognition and Fibonacci ratios to watch for key pattern formations, using retracements, using expansions, using extensions, please do subscribe to the channel. And if you found this video of good value to yourself, then please hit that like button, because that just indicates to me personally that people find the content that I produce useful, educational, and it just encourages me to keep on producing more videos for you guys. So thank you very much for watching. Good luck and good trading.